Hi guys and welcome to MentorMe's YouTube channel. My name is Alan Arvind and I'm a CFA chart holder and founder of MentorMe Careers. And today we are here with another preparation video related to interview questions. And today we are talking about fund accounting. Okay. And just to give you some statistics, if you actually go to LinkedIn, you'll find there are about 750 LinkedIn jobs related to fund accounting. There are about 100 listed on specifically for Hyderabad. And if you specifically talk about a company which only deals with majorly fund accounting services, then we're talking about SITCO, which has about 75 jobs related to fund accounting. And even in spite of this opportunity, most of the freshers tend to not clear this interview, and that's exactly what we're going to cover in this video. Let's first discuss about what is exactly fund accounting, right? So fund accounting is very less understood by students because they've never actually come across this concept in their syllabuses of whichever qualification they're actually pursuing. But in very simple terms, what fund accounting actually means is if you're talking about, let's say, asset management companies like Franklin Templeton, HDFC, maybe BlackRock, these are the funds which are taking public money, they're pooling it and they're generating returns on it. Right now, generating return is just one part of it, but all the back office activity which follows after creating the capital and managing it is the job related to fund accounting, right? And as a lot of regulators demand that every fund has to present certain reports like reconciliation statements, like handling redemptions, handling breaks in investments, all of this needs a specialized role which is actually called as fund accounting, right? So if we go specifically by, let's say, one example of HDFC, right? Now HDFC, if you go to their annual report, you'll find that there are about 25 fund managers. So if we say that the fund's major activity is to actually pick up stocks and generate returns, then there are 25 fund managers as per their annual report. But if you look at the numbers, there are about 1618 employees apart from these 25 fund managers, which clearly makes you or gives you a story of the fact that there's a lot of work apart from managing the fund itself. Now, coming to jobs, since we're specifically talking about jobs, you will find a lot of MNCs which are not exactly serving Indian funds in India, but they're actually providing these services to US or Europe or Australian based funds, because these activities are costly in the US to actually employ, and hence a lot of companies are formed in India, KPOs, which actually provide these services to the US at a much lesser cost, right? One of the example is SITCO, which hires a lot of candidates on fund accounting. And if you closely see the kind of services that they actually provide, they actually have a platform, a cloud-based platform, which they sell it to the fund, in which you as a fund accountant are supposed to calculate NAVs, make sure that the data whichever we are sharing with the client is accurate. Now coming to the eligibility to work in fund accounting. So if we specifically talk about fund accounting, the eligibility will start all the way from graduate freshers in commerce, but there are also high-end jobs in fund accounting which are specifically for candidates with qualifications like CFA, CA, CMA, and also people coming from MBA tier 1 and tier 2 institutions. Now, since we're specifically talking about interview questions, let's start with the first interview question, which is, what is management fee? Think about the fact that there are two entities when we're talking about fund management. One is the fund itself, where the capital is pooled together, and there is one, on the other hand, there is an asset management company which is giving the services. So if, let's say, 100 crore is collected in one fund in a investment bank or let's say a bank account, the asset management company is the company which is going to provide services of managing this capital, generating returns, and in return, they're going to charge a fee, which is nothing but 2%, which is also called as management fee. This is a frequent question, and if you're not able to answer this question, then I don't know whether the second round of interviews will actually happen, because the basic understanding of management fee and performance fee is very critical for a fund accounting job profile. Moving on to the next question is, we're talking about cash flow statement. Now, cash flow statement is obviously nothing different compared to what we have in our general financial statements. It's the same concept, but the only difference is that they're asking you this question specific to a business visit which is into asset management, right? So whenever we create a cash flow statement, we start with net income, right? That is the final net profit that we get from the income statement. We add the depreciation back, we plus and minus to do the changes in working capital, then we do the capex, and then we do the financing cost, right? So this is the structure of cash flow statement. The reason why companies in fund accounting will ask you this question is because they want to understand whether you understand the three financial statements, and also because most of the work related to fund accounting is related to financial statements, right? If you find any value in our content that we create related to interview questions, then give us a thumbs up, like and subscribe our channel. And if you have any questions, or if you want us to prepare a specific video on interview preparation for a company, then put it in the comment box and we'll be happy to create a content on that. The next question, what falls under finance versus investing? Now, this is critical because fund accounting services which are there in India are not for Indian based mutual funds. That means you also need to have an understanding of IFRS versus GAAP. So they would be asking you questions like whether interest in case of an asset management company, will it fall under financing or will it fall under investing, right? And hence the basic categorization of whether, let's say if an investor is withdrawing the capital, will it come in financing or whether it will come in investing. So this is the basic understanding of IFRS versus GAAP. Specifically in case of asset management companies, what you should go through before preparation for this interview. The next question is, what is a master fund and a feeder fund? Okay, now think about this. For example, if you have 5 friends and let's say we want to get our money managed, right? Now, how do we get managed? I mean, there's one way of saying that we'll take everybody's demat account, trading account, and we'll put trades through their demat account, right? That is one way of doing it. But the only problem with doing that system is the fact that we will not get the scale of operations, because every time we will have to execute a trade, I'll have to take permission from each of these friends to execute a trade. Now, instead of that, what we could do is we could create a structure like an alternative investment fund, which is nothing but hedge fund in case of Indian terminologies. We could pool all of that capital together in one specific trust or one specific bank account and then execute the trade. This is nothing but a master feed structure in case of funds, right? Hi guys, so I'm interrupting this video to just make you aware of what MentorMe Careers does. So MentorMe Careers is a platform, an edtech firm which actually provides various skill-based courses like financial modeling, investment banking operation, able KYC, and we also train candidates for CFA level 1. So if you are one of those who are looking for a change, who is looking for skill-based courses but also wants to get placed in a firm, then you can visit our website at mentormecareers.com and you can check out our courses and you can download our placement reports. We are known for providing placements. So back to the video again. The next question might be related to specifics of various asset classes like fixed income, equity and derivatives. The questions might, the major aspect or the major reason why questions will be asked in this section would be to gain an understanding whether you are aware of all the asset classes and how they work. For example, if we speak about bonds, right? Whenever we are speaking about bonds, bond has 2 aspects. One is principal, that in a loan case, if you take a loan and you're repaying the loan, the bank is basically taking the principal back and we are paying the interest, right? Similarly, a bond is when we are dividing the entire loan across various investors, we are paying them interest and we are repaying the principal, right? Now, bond gets affected a lot by interest rate fluctuations. For example, if RBI comes through and reduces the interest rate, that means overall generally the bond interest rate is going to fall and the bond prices are going to go up. This is nothing but the sensitivity of interest rate to the bond price, right? Now, in this concept, if the bond is, let's say, of 10 years, right, there will be higher sensitivity to the price or the rate changes which the RBI gets, right? That is nothing but duration. So these are the concepts related to bonds and many more other concepts like coupons, what is a zero coupon bond, convexity. All of these concepts should be well researched before you go to the interview. Obviously, one of the most common question is they might ask you is what is net asset value. Now, if you actually go to Glassdoor and if you research on fund accounting interview question, this is the most common interview question you will find is NAV, right? What is net asset value? So, as the name suggests, it is saying net asset value, which means reduce all the liabilities of the company from the assets and divide by the number of shareholders or the unit holders. That will give you NAV. And NAV is the actual stock price. Think of it as stock price at which you buy a mutual fund unit, right? So for example, when you're buying shares is nothing but the entire equity value of the company divided by the shareholders. Similarly, whatever assets is remaining in a mutual fund trust, you reduce all the liabilities like fees, redemptions, etc., losses, and whatever asset is remaining, if you divide by the number of investors, that is nothing but net asset value. Now, similar to this is the next question, which is about gross asset value. If I do not reduce the liabilities from the total assets which a mutual fund is actually holding, then that is nothing but GAV, right? So GAV versus NAV is one question which can turn up into an interview question. Now, since you are applying for fund accounting jobs, fund accounting is not only limited to mutual funds, it might be also provided to hedge funds. So the question might be, what is the difference between mutual fund and a hedge fund? When you're answering this question, make sure that you answer in a more concise manner and giving the basic difference between mutual fund and hedge fund. So a mutual fund is given or is publicized and marketed to many investors. So an investor with 500 rupees can also invest in a mutual fund. Whereas when we're talking about hedge fund, it is only for eligible investors. Why? Because hedge fund does not run according to the rules of the various mutual funds. For example, the minimum investment required for a hedge fund in India is about 1 crore, which means that the person who is investing has the risk appetite to lose that money, right? But this is from the angle of the basic difference between hedge fund and mutual fund. But in terms of fund accounting, what you need to understand is mutual fund only charges management fee, whereas hedge fund runs on management fee plus performance fee. And the performance is based on generating higher returns. So if they generate higher returns than compared to, let's say, a benchmark, then they will charge a performance fee. And that's the reason why hedge funds generally are the ones who are actually taking the highest risk and generating the highest amount of returns. Now, related to the same question in the last slide, what we spoke about hedge fund versus mutual fund is a concept of higher watermark principle. Think about higher watermark principle as not giving the same salary to, let's say, a person for doing the same amount of job which he did in the last year. For example, if you have, let's say, a team member who is doing X amount of activities and X amount of productivity, you would pay him, let's say, $5. Now, if he does the same activity next year, why would you give him $5 again, right? Why would you give him $10 again? So the higher watermark principle says that if I have generated 20% return, right, in 1 year, I gave him the performance fee. Now, in the next year, if the performance drops to -20, right, and again in the next year it goes up to +20, I will not give him the same performance fee again. The reason is because then I would be paying him double for the performance that he has provided. Now, during this time, the management fee is running as it is. The management fee, whether I perform, whether I do not perform, is a fee which has to be paid to the hedge fund or the mutual fund. I hope this video actually helped you for your preparation for any fund accounting positions that you're actually applying for. And if you want us to prepare more content, more deep content on specific questions or specific concepts related to fund accounting or any other concepts, please do let us know in the comment box so that we can actually create it. And thank you for watching, and we'll see you again. Bye-bye. You can also follow us on Instagram, where we post shorter versions of interview preparations and career guidance. And if you would like to actually visit our website and check out our courses, you can go to www.mentormecareers.com and you can check out our courses, and I'll see you again in the next video. Bye-bye.